Hey, crypto family. Hope y'all been doing good. So today we're going to talk about a couple of news articles. One being the ramifications to Bitcoin of the upcoming Federal Reserve rate cut, Wells Fargo creating their own digital token, and Stanford creating a crypto social media platform. Now, so the first article here by CoinDesk says, will Bitcoin's price rally after Federal Reserve rate cut? And this is by CoinDesk, published today, September 17th. And it says here, Nigel Green, founder and CEO of a global financial advisory giant DeVere Group, believes the cryptocurrency will pick up a strong bid in response to the Federal Reserve's rate cut, as a reduction of borrowing cost will lower the yield return on the US dollar. So basically, lowering that yield causes people to want, higher returns, so they flock to something greater, such as Bitcoin, in hopes of achieving that higher return. It says, meanwhile, Anthony Pompliano, founder and partner of Morgan Greek Digital Assets, tweeted in August that Bitcoin could fly high if the federal rate cuts are followed by a government buying program such as quantitative easing. And he says, Bitcoin's success formula: cut rates, print money, Bitcoin halving. So again, Bitcoin halving is coming up in 2020. That'll be a catalyst, a lot of people believe, for the increase in Bitcoin's price. But again, cutting rates basically pumps, with quantitative easing, pumps more money into the market, thus more people, buying Bitcoin. And it says, former Wall Street Journal trader and journalist Matt Kaiser also believes the Fed's continued monetary easing would send Bitcoin to $100,000. So again, those are some pretty outlandish predictions, but they're expecting Bitcoin to rise nonetheless. Now, this federal rate hike is supposed to happen on Wednesday, so tomorrow. So we're going to see what exactly happens. But it says here, also, traditional markets have priced in a 25 basis point rate cut, and the FX markets will likely dump the US dollar only if the Fed cuts rates by 50 basis points or signals aggressive easing over the near term. In that case, the anti-dollar sentiment may feed into the crypto market. So again, it's just determining exactly how harsh these rate cuts are, and if they're very harsh, then again, that's better for crypto. So because the US dollar will be valued less and people will flock to Bitcoin to get that higher return. So we'll have to see what happens with this. And again, nothing could happen, but again, just looking at different catalysts for the Bitcoin price to rise. The second article I want to talk about is, again, Wells Fargo to pilot dollar-linked stablecoin for internal settlement. So as you know, a lot of banks are starting to create their own stablecoin. Basically, they see the advantages of it, the reduced cost, the security, and just the speed at which they can transfer their capital and ease for customers. So it says, US-based financial giant Wells Fargo is developing a US dollar-linked stablecoin that will run on the firm's first blockchain platform. Dubbed Wells Fargo Digital Cash, the tokenized dollar will be used in a pilot initially for internal settlement across the company's business. It says the digital token will enable to settle internal cross-border payments across its global network. Its international locations will also be able to move funds between each other using the token. And they said, quote, a growing demand to further reduce friction regarding traditional borders and today's technology puts us in a strong position to do that. So they see the advantages of creating their own token. Basically, they also mentioned that this can happen after hours, so any time of the day. So again, you have that flexibility, that security, that speed. So they are recognizing that, and they are starting to create this token. So Wells Fargo has previously launched other blockchain projects, including a bank prototype and a trade finance platform aimed at the cotton market. It's also invested in blockchain finance startup Axani. So you can see they're starting to really get into this blockchain network and really trying to get the advantages of that. So we'll have to see if other banks jump on board, and if anything, this will help increase awareness of cryptocurrencies once they do roll out this token. Now, last but not least, it says Stanford grads crypto network hits 500,000 users in 6 months. So this was published by Cointelegraph today. And this kind of reminds me of the Facebook platform whenever it first launched. You had only launching at certain universities, and then you had users constantly increasing. Now, basically what this is, it says a smartphone-focused cryptocurrency network created by a group of Stanford graduates has amassed over 500,000 users. It's dubbed the Pi Network, and it's consolidated its user base in under 6 months since its launch in March of this year. And it's created by computer scientists, anthropologists, and a business major. And what it basically is it's a way of basically validating transactions. Typically, it's geared towards mining. So it says, rather than mining via a compute-intensive algorithm, Pi's ledger is secured by a system wherein users vouch for each other's trustworthiness. So it says, these interlocking security circles create a global trust graph showing who can be trusted to record transactions. This approach allows users to contribute to crypto mining directly from their phone by leveraging their existing social connections. So basically, it's like again, it's like a trust network. You're telling, hey, can this person be trusted to verify this transaction, and so on and so forth. So it's really more of a it's a social network in a sense that you're really trusting each other and basically trying to create this whole entire trust network to run smoothly where you can run it on your phone. And it said Stanford University did not itself provide resources for the project, although the founders underscore the influence that their interactions with computer science professionals Michael Bernstein and David Mazuris and bioengineering professor John Liphart had on the project. And it says human-computer interaction is all about identifying unstated needs and assumptions in the computational systems that we inhabit and rapidly iterating our way toward a solution that addresses them. In addition, our research thinks deeply about how to design systems that encourage massive online participation. So again, getting that online participation, increasing that mainstream adoption, and that awareness. So I think this is good. And again, it's just going to keep growing and increasing that mainstream adoption, which we all want, because that means prices will continue to rise as more cash flow comes into the market. So with that, I hope you all enjoyed this video. If you did, please give it a like, comment, and subscribe if you haven't. Until next time, thanks for watching.